Hello and welcome to this quarterly update with SKAGEN Kon-Tiki and portfolio manager Knut Harald Nilsson. And first, Knut Harald, how would you sum up the first quarter for SKAGEN Kon-Tiki?
It's been a good quarter, both on an absolute and relative basis, and sums up now 2 quarters with a strong absolute and relative return.
Now let's take a quick look at how the fund has performed and the best contributors in the quarter. There are signs that we now may be reaching the end of an 8-year bull market in developed markets. How would that affect the emerging markets in your view?
Obviously, the developed market has an impact on emerging market equities. They're not totally separated. But if you look at emerging markets, you have gone through a period up to last summer of 3 years of underperformance. We now seen that money is coming back into emerging market equities. And that is based on the fact that what you saw in the middle of last year, when you saw that corporate results started to improve. Expectation was set low, and you have now seen 3 quarters of beating expectation, which is very positive.
Let's talk a bit about so-called chaebols in South Korea. First of all, what are they?
In Korea, the bigger companies are mostly controlled by families, and they are controlled through a spider web of cross-holdings, etc. So making the transparency very difficult. There's an election in Korea coming up on the 9th of May. The front runner is Mr. Moon. He's a social democrat. What he has said specifically regarding to these chaebols is that he wants to improve the protection of minority shareholders. And in the past, there's been several oversteps by these companies. Almost all the leaders of the chaebols has been in jail or convicted in the past for embezzling money from the company. So I think that is very positive. We don't know yet what is going to happen and how this law is going to change, but it seems to be net on the positive for minority shareholders.
And SKAGEN Kon-Tiki has quite a lot of money invested in South Korean companies.
Yeah, definitely. South Korea is one of our biggest countries in terms of holdings. That is predominantly Samsung and Hyundai, which combined contribute about 14-15% of the fund. Samsung has done a lot on the governance side, increased dividend, started a quite significant share buyback. Operationally, they're performing very well. The memory market is exceptionally strong, and they also recently launched a new handset, which has received good reviews after the failure with the Note 7 last year. So they continue to buy back shares. Valuation is still not stretched, in our opinion, and it looks fairly okay. When it comes to Hyundai, operational is still on the weak side. Margins has come down over the past 3 years. I think we're reaching an inflection point, but the most important thing in Hyundai is actually releasing the values and crystallizing the values, where you see that the auto operation, for example, has a net cash position equal to 40% of market cap. So, you know, they've done something on the dividend streams, but they can do a lot more, and we think that the restructuring of the spiderweb structure will increase transparency and vitalize values.
In your view, what will affect the emerging markets going forward?
I think it's you have to look at emerging markets not as a homogeneous asset class. It is wide differences in interest rates, economic penetration, etc. between these countries. So look at single countries. If you look at some of these markets, you've seen positive signs on the economy. You've seen inflation, for example, in Russia and Brazil coming down from 10% a year ago to sub 5%. Which is obviously positive for the stimulus they can do on the interest rate side. And that is again positive on valuation of equities. So I think that, but the most important thing is to look at the single companies and see the performance. And on aggregate, we've seen a positive trend in earnings revision. We also see now that the export numbers coming out from Asia has been very strong. Korea, for example, export was up 14% in February, and most of these countries are actually seeing increasing export. You also seen actually, and this corresponds well with what you see in the global economy, which is actually you see signs of a pickup in economic activity, which is positive obviously for emerging market as well, both on the export side and domestic demand.
Thank you very much, Knut Harald, and thank you very much for watching.